What's going on, YouTube? In this video, we're going to talk about Coupang, ticker symbol CPNG, and they just reported their Q3 earnings, and they missed on their EPS, but beat on their revenue. Also, active customers have surpassed 20.4 million, a growth of 14% year over year. We can see in Q3 of 2022, they had 18 million and now up to their 20.4 million. Year to date, company is up 12%. Over the course of 1 year, it is down 6%. In the post market, it is down 7.6% after earnings had been released. Also, they had a little small statement with the CEO and CFO here, and the CEO mentioned that in Taiwan, so they have expanded their company into Taiwan. I'll drop a link to, we have valued this company before, and I tried to give a pretty just basic understanding what the company does. It's kind of like a little mini Amazon, really. But the company has expanded its services into Taiwan with their rocket delivery, and their rocket delivery is same day or dawn delivery services. And that has helped 12,000 small businesses export their products to a new market over the past year. They are also expecting their consolidated margin to continue its upward march on an annual basis, which is hopefully going to be true, because that was one of the things that did decline quarter over quarter, was margins slightly. So on their earnings release that they gave to us, we have gross profit margin of 25.3% and net margin of 1.5%. Also, free cash flows was $1.9 billion in the trailing 12 months. On the margins here, we're going to hop over to the valuation spreadsheet real quick, and we can see, we scroll down, gross margins last quarter 26%, this most recent quarter 25.3%, but slightly higher than the trailing 12 months. So margins compared to trailing 12 months are slightly better on gross. Net margins, though, slightly down for the trailing 12 months and compared to last quarter, sitting at 1.5. Most recent release, trailing 12 months 1.9. So margins, slight decline on the net margins there. And when your margins are already this small, any slight decline is obviously a pretty big deal to the valuation of the company. On the income statement, total revenues year over year had grown about $1.8 billion, but total operating costs and expenses also grew about $1.07 billion. So then operating income was basically flat year over year. They did get to add in some interest income, which then gives them a net income of $91 million in the last quarter. Share count is being diluted slightly, 1.8 basically billion shares last quarter, 1.808 billion shares most recent quarter. Sorry, not last quarter, but year over year change in share count. Cash and equivalents, $4.8 billion compared to last year. Actually, these are 9 months change. So in the last 9 months, they added $1.3 billion to cash, so that's pretty solid. Inventories have been stable year over year, also good. Down here on the liabilities, they did add quite a bit to their liabilities. Almost all of it, though, is from accounts payable. We can see about $1 billion increase on accounts payable. So that adds to their liabilities section here. And we can see year over year up $1.6 billion in liabilities. And all of that basically is attributed to short-term current liabilities. So because of that, we've got $4.8 billion in cash and $6.5 billion in short-term debt, which nets them out to a negative $1.7 billion of short-term debts. Because this is a somewhat similar company to Amazon, Amazon operates in a very similar fashion. So not very concerned about that. Cash flow statement, our 9-month net income of $327 million. We get to add in depreciation, stock-based compensation, lease expenses, other things. And then obviously accounts payable change of $1.2 billion added to our cash flows. So not sustainable there. So that's going to kind of give us a bit of a false free cash flow on this most recent quarter. They're stating we got CFOs of $2 billion, but if you strip out accounts payable, at least strip out $1 billion of it, that would then leave you with about $4 billion of free cash flow in the last 9 months, not $1.4 billion in free cash flow in the last 9 months. But another positive thing here, though, is we have $703 million of CapEx has been reduced down to $662 million in CapEx. So good reduction on capital expenditures. So over here on the active customers, we've already kind of went over this a little bit. We can see the change, 14% change on active customers. The other change though was the amount net revenues per active customer. We can see is up about, $20, $19 per customer, which is a 7% increase, which I would probably contribute that to potentially inflation, depending on what inflation is like over in the South Korea region there, and potentially Taiwan as well. I would feel comfortable to assume that a good chunk of that is just from inflation, or maybe there's a potential that customers are just using their platform more, so that could also contribute to an increase in revenues per customer. So over to the valuation spreadsheet, not much has really changed on the company, so there's not going to be too much of a change in the overall valuation, but our EPS will stay the same. Our PE ratio, I did change it to post-market numbers because we're down 8%, so it's now PE ratio of 66.2. That gives us a P/E fair value of $13.31. Multiples comparison is $11.24. Manual PE market cap will be down tomorrow morning, so this will actually look even better than where it is now, but it'll take about 18 years for this company to earn its current market cap. Price to book, 5-year average 15, price to book today at 11. Graham's valuation gives them a price of $12.04 per share. Discounted cash flow. There was no forecasted free cash flow growth rate on the company, but I did plug in 10% growth rate on free cash flow. Assuming they can maintain that and are able to do that. We can see how free cash flows have performed in the past, and they do consistently, except for 2021. It seems like they're slowly starting to trend to positive free cash flows. Obviously, in the most recent trailing 12 months, we can see a very big portion of those positive free cash flows is from accounts payable. But let's assume a 10% free cash flow growth rate. So that gives them a $12.40 per share on discounted cash flow. Rule 72, we have 3 sources of EPS growth for an average of 27%. That goes into 72, 2.68 times, and then that goes in 10 years, 3.7 times. So we could double our current EPS about 4 times. So just shy of 4 times, really. So I gave them a future EPS of 3.5, which gives them a fair value of $46.94 per share. Over here at the summary, prior to post market, we were trading at $17.07. That since has obviously changed. Post market, we're sitting at about $16 per share. Based on our calculators, we get a fair market value of $19.19, 30% margin of safety, $13.43. Analyst price target of $21.60. I would probably venture to assume that will likely be changing in the near future, in the next coming couple days. By the end of the week, they will probably have an updated price target. We did value this company before. When we got a fair value of $21.40, buy price $15. We can come over here and see our changes on our valuations. Benjamin Graham, slightly down, and the yellow is the most recent numbers we just went over. And discounted cash flow down, multiples down, Rule 72 up slightly, and P/E valuation down slightly. So basically across the board, everything had ticked down ever so slightly based on the most recent numbers and expectations of growth rate. So over here on the stock chart, I did draw in this little red tiny candle. This is potentially roughly where we might open up tomorrow morning, depending on if anything happens in the pre-market. But we're looking at maybe a little bit of some support in this range, about $16. Currently trading below that. We'll have to wait and see what happens tomorrow morning. But depending on what happens tomorrow, you're probably going to see this thing's going to go one of two ways, and it's probably going to come down to like $14.50-ish per share. I would venture to assume that it's going to hit this trend line that we have drawn in, that made a low back in 2022, and since then has made higher highs or higher lows, and has stayed within this wedge pattern here. So it looks like we might pull back to this channel and hit $14.50 per share, and then maybe bounce off that, come back up to the top of the channel, get up to maybe $18-ish per share, depending on how quickly it does it. Maybe bounce back around in here until earnings or something changes within the company that pushes this thing higher or potentially lower. I am invested into this company, and I'm betting on this company going much higher. I like the outlook of the company. I like their forecast. I like how their principles are. They follow Amazon's principles, where if they try something They try and fail fast if it's going to fail, and if it fails or if it's not creating enough revenue, then they just get rid of it. They, you know, it's the same thing Amazon does is when they try something new and if it's not working, they get rid of it. Just cut it off and just move on. And they're doing the same, they're applying those same principles as what Amazon is doing. And so far, it looks like it's working. They're doing a good job. They did venture into Japan. They went into the Japanese market. They did close down that particular section of their business because it wasn't working. So they said, "All right, we'll move on and try somewhere else." And that's exactly what they did. They were trying Taiwan, and Taiwan seems to be doing pretty good for them so far. Another thing I really like with the company though too is the management. Is their attitude for the company is very bullish, very positive. They're always just talking about positive things, not just, you know, they, obviously if there's a problem, they bring it up and they say, here's a resolution. They've got it kind of figured out. That's just a very good thing to have within a business is a positive management. It makes everybody that's within that business also carry a positive attitude, which then makes a business grow a lot better and more efficiently at a healthy rate. Pretty excited about the growth on the company and see where this company could be headed in the future. But that is it for Coupang. If you found value in this video, drop a like, subscribe, and comment. And we'll be back later with another stock analysis video.